Sir, there's a GC right there, Cliff.
Go.
It's piers. We got concrete piers and wood piers.
Yes, sir.
Checklist. Check out the checklist. We got it for everything we need.
Yes, sir.
All right, you forget some things sometimes.
Mhm.
So this is going to outline, make sure you hit every single thing. What's the foundation, plumbing, electric, painting, flooring, everything. So you don't miss anything.
Okay.
You want to make sure you get all your checks.
Okay. I want to introduce you guys to Cliff Hunter. Cliff is a world-renowned flipper. He actually flips. He's also a GC as well. He's a good contractor. When it comes to all of our renovations, all over the nation, you'll talk to this guy right here.
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
Can you hear me now?
Yeah, I got you.
There we go. My bad, y'all. What's up, y'all? It's your partner Dale, and Cliff back in the saddle again for another edition of Real Estate Friday Live. Man, we call it the Investor Edge, brother. Cliff, what's going on, baby? How you doing, big time? What's going on, baby?
Man, doing all right. You know, it's another long week, but, you know, made it to the end.
Yes, we did, man. Hey, man, did we get the bag, though?
Man, somebody else got the bag today. That's what I'm going to say.
Yeah, man, we actually got the bag a little bit, man. It has been a very interesting week for your partner too, y'all. We got some stories to tell y'all today and the importance of doing things the right way, y'all. We got a lot of things to tell you guys, man. So, man, let's dive into this thing real quickly, man. Now, guys, if you could do us a favor real quickly, guys, if you don't mind, like, share, and subscribe, guys, if you don't mind. If whatever platform that you're on, there's a little bell right there. Do us a favor, guys. Click on that bell if you don't mind. So we come live, even though we look better than you. It's all good, baby. Come kick it with your partner and Cliff real fast, guys. But let's dive into this real fast. Here are topics for today. Here's our topics, guys. Number one, guys. Hey, man. In Bitcoin, there was a $2 trillion wipeout of Bitcoin. We'll talk about that. Number two, that there was a foreclosure bloodbath that no one talked about. 40,000 homes were foreclosed on in the first part of this year. That's a big deal. Number three, every investor needs a title policy when you buy a property. We got stories to tell you guys. And then lastly, we're going to give you guys our tips on what you can do in today's market. But let's dive into this first one, guys. Real quick here, man. The first one, where did it go? There we go. Where did it go? There we go. Man, Cliff. $2 trillion of Bitcoin was erased this week. Now, guys, Cliff is a Bitcoin guy. Am I right, Cliff?
No, yeah. I know a little bit about it.
A little bit about it, man. Real fast, Cliff, before we go into what's going on, tell people what blockchain and crypto is, man, so they can understand the foundation of it, and then we could dive into what's going down.
I mean, basically, like crypto is just a ledger. So it's just tracking all the transactions on the network, right? So every time I send something to Dale, he send it back, it's going to track it on the blockchain. It's just accounting for everything that's going on. What makes it different than like banks is the banks they have their own network that only they can see.
Yeah.
The blockchain is open to the public. We can see every transaction that's happening on the network.
Yep. Now, Cliff, man, is crypto a inflation hedge or no?
To some degree, yeah.
Some degree? Okay. Well, this $2 trillion wipeout, we're going to want to hear your wisdom on why you think it happened. Is there another plan behind this and how it can rebound? Sound good?
Mm-hmm.
Okay, here we go. Let's dive in this real fast. This is Mark Moss, guys. Mark Moss is a monster at this stuff, man. He's a beast, man. One second. He's a beast at this stuff, man. And what Mark's going to talk about what's actually happened, guys, real quickly, and we're going to dive into what I believe, what Cliff believes was truly behind what actually happened with this Bitcoin thing. Here we go.
Bitcoin's crash off its all-time high and then its sudden crash last week, it left many people stunned. And it took a couple days, but now we have the data to see exactly what happened and why. Now, everyone's had a theory, right? Some say it was a Hong Kong fund, a carry trade, a well liquidation. Well, I dug through the ETF flows, the options data, the CMA basis trades, and there was no single culprit. That's the part that matters, because this wasn't a one-time event. It's baked into how Bitcoin now trades inside the financial system, and it cuts both ways. So in this video, I'm gonna break down the 3 mechanics that cause this and how to position yourself before they move price in the other direction. And if you wanna understand the system, not just react to it, make sure to subscribe to this channel right now so you can keep up as I discuss this more. And let's go. All right, let's jump into it. We got a lot to cover today. We're going to go a little bit deep, but I'm going to try to keep it very easy to understand. But let's just start off by talking about what happened last week. It was February 5th at the time of this recording. So last week, Bitcoin's price had been coming down, but then it crashed in a single day, and it was so severe that Goldman Sachs called it a 3.5 sigma event. Now, what does that mean? It basically means it's like a statistically like 0.05% chance of happening probability. So basically it means like it doesn't happen. And again, this was after Bitcoin had already been sliding for about 4 months, right? And then it had that big crash. And so whenever that happens, we see this big move. Everybody wants to find out why. Now, there's not always a reason why, but it's important to understand why so that we can learn to avoid it next time or benefit it from if we can. And we want to understand it. Why did it go lower? Also, is it dead, right? Is it going to go back up and so forth? So let's take a look. Now, the first thing we want to do is we want to look at the trading volume. We want to see the numbers. And when you look at them, they're completely wild. First of all, BlackRock's Bitcoin ETF, which is IBIT, it did over $10 billion in trading volume in a single day.
Wow.
Now, is that a lot? Well, it's double the previous record, double that. The options activity also hit an all-time high. But here's the weird part. It was led by puts. What does that mean? Well, basically the betting was almost all to the downside. But here's where it gets really strange, right? After a day like that, everyone got out. You'd expect money would be running for the exits, right? Like you're probably watching this because you're scared and you want to know if it can keep crashing. So for comparison, just 6 days earlier, IBIT was down 5.8%, and yet we saw $530 million in redemptions leaving for the exits. But after this 13% crash, you'd expect probably at least 500 million, maybe $1 billion running for the door. But the opposite happened. IBIT saw 6 million new shares created, 230 million in new assets. The rest of the Bitcoin ETF complex, they were also positive. There was over 300 million in net inflows. So we had record selling, we had record volume, and we had money flowing in. Something about this doesn't quite add up. And so, of course...
So Cliff, man, right there, brother, he's saying it didn't add up. He said it didn't add up. Okay, rocking with him. Here's the question is, based on what you're seeing there, what do you think was actually happening here?
Man, it's hard to say. I mean, they have a bunch of people putting out puts. So, and just to let you know how it works in the options, you get leverage usually when you do puts, right? So what that means is for every share I buy, I get leverage of up to 100.
Whoa, 100%? Damn.
No, 100x.
Oh, okay. That's like, God damn. Okay.
So if I put $1 in, I get $100 in options.
A line of credit.
Exactly. So that means when he saw that selling volume, probably it was a big player or a handful of them were putting out option bets. And they were able to take all those shares and put those in puts. And as soon as the market started turning, it just started raining down and they started capturing the whole way down. So that's what I'm looking at. That's what I'm thinking so far, because that's the only thing that it would have to be a small group to do it, because money kept flowing in from everybody else once the Bitcoin dropped.
Okay, so what you're saying is that's what kind of caused it Okay. Do you think
Like,
it is how it was caused was based on how it was constructed in the whole Bitcoin system itself?
I mean, it's hard to say exactly what it's caused, but I'm thinking it's probably. He said there was options, so I'm thinking that there were some options contracts that were big, or he said there's a lot of volume. Usually, with volume comes option.
Gotcha.
Man, that's the best thing I can think of right now.
Wow. Well, how can Bitcoin rebound back?
It's gonna rebound. It's gonna rebound back. So the reason why you're gonna see volatility is because Bitcoin is not propped up.
Okay.
When you look at the stock market and you're used to seeing the S&P and you listen in the stocks, those are propped up American companies, the American system backed by the Fed.
Okay.
That's why you get stability, because they are pumping money into the system.
Okay.
Bitcoin does not do that.
Okay.
So you're going to get more volatility because there's not a hand behind it smoothing it out.
So here's my question. What's backing when it comes to stock market, right? And guys, I own no Bitcoin at all. I don't. So I'm asking questions to gain more clarity. I'm very interested in the crypto space. I know a lot about it, but by no means am I a master of it. No. My question is here, because I see Bitcoin as a stock market without anything tangible behind it. What's behind Bitcoin is a lot of hype, right? Versus when it comes to stocks, you have a literal company behind it, right? Or real estate, you actually have a piece of property behind the capital. So it seems to be crypto is really driven by more money being infused in it, kind of like it's the cyclical money. Would that be right or wrong?
Yeah, I mean, you're right in the fact that crypto's not backed by anything.
Okay.
That's why you get volatility. It's the whole thing is trust. I mean, you got to think of it. It's basically like the dollar.
Yeah.
But with no America behind it.
Mm-hmm.
You know what I'm saying? It's just there. So crypto's not backed by anything. The reason why people like Bitcoin is because, one, it's legitimately no one owns it. There's no real backing at all. Some of the other cryptos, they have some backing. Bitcoin has none. And a lot of times what people like about it is its mobility.
Okay.
That's really what they like. Let's say because really it's not even for Americans, I would say. It's a lot of foreign. If you're in another country and you want to be able to change or move or go someplace, it's easy to send the money. It's easy to put your money in Bitcoin and then move to America or Canada or whatever country you want to, and your money can transition very easily. Versus having it to go in their own bank that they don't trust. Like, would you put your money in a I don't know, I'm throwing out something in a bank in a country that you don't feel comfortable with?
Hell
Probably
no. No.
Exactly. You don't even put your money in the Cayman Islands. You're probably not putting your money there.
No.
Right?
No.
Because you don't trust the banking system. But if you put it in Bitcoin, you can bet you're going to get that money back out somewhere, no matter where you go in the world. That's really the value of it.
Okay. Well, I'm rocking with you. I think that here are my thoughts on crypto. Because Mark Marks goes deep into this thing. It's a 15-minute video. He irons it out. I'll put it in the show notes for you guys to go look at it. Follow Mark Moss. He's one of the best I've ever seen when it comes to talking about Bitcoin. He's made millions with Bitcoin, right? So the gentleman here says he was saying there's a ton of trading volume, but there's puts sales. You're right. BlackRock lined up sales and cascaded a crash, dominoes. So what you and him are saying is a lot of these puts is what probably may have caused this. Interesting. Right. Now we have somebody saying that I disagree. Interesting. Now, Avita, why do you disagree? And we welcome in any type of dialogue here, because I'm gonna give what I think actually may have caused this, and I think this was strategically done, intentionally. The reason why is because, and I'm gonna go back real quickly. The Trump administration passed the Genius Act. Am I right? What they actually did was, he said the files have revealed who's behind him Bitcoin. Head for it. Oh, gotcha. Anyways, the Trump administration passed the Genius Act, And the Genius Act was the first time the government began to shake hands with a cryptocurrency. Am I right or am I wrong?
What you talking about the Biden administration?
No, I'm talking about the Trump administration.
Oh, well, the Biden administration did, but they did it, and then they weren't crypto friendly, right?
I got you.
They had some, but you're right. I would say the Trump administration, they put everything behind it.
That's what I'm saying. So the Trump administration passed the Genius Act,
right?
Therefore, shaking hands with Bitcoin for the first time, because typically Bitcoin is opposed to centralized power. Am I right? Am I right or wrong?
Right, exactly. Yep.
Got you. So now get this: the 2 gentlemen that are over the Commerce and the Treasury, specifically Commerce, Howard Lutnick, is known as one of the godfathers of cryptocurrency. He was the one pushing this, and also when it comes to the Treasury, the other guy, Scott Bessent, he made all his money in currency trading. So these guys understand markets very well, right? And it just so happens to where the government knows that they cannot pay off any debt. They have to inflate the debt away. How do you do that? You begin hearing a lot of talk about tokenization. I believe tokenization is a way for them to infuse cryptocurrency to make it more entrenched into the financial markets, as well as into tangible assets, real estate, gold, stocks, pensions, bonds, things of that nature. Because I believe they're going to use crypto as a way to digitize the dollar and basically put our debt onto the digital platform itself. How do I know that? The finance minister for Russia came out early on this year and said that, hey, actually last year, and said the Trump administration, they're trying to inflate the debt away. That's exactly what he actually said. So I'm like, wait a minute. Why would Bitcoin, who is known as a inflation hedge, have this type of crash? Unless they're trying to force a crash or a black swan event to say, government comes in and says, hey, we'll step in and we'll fill the gap. How? We just move the data over to the digital side. And we'll now attach Bitcoin cryptocurrency to the bonds. Because 95% of all transactions done in crypto are backed by the US dollar. And so I'm like, this has to be strategic, in my opinion. And guys, I may be wrong. If I'm wrong, I'm cool with being called out. Not a problem with it at all. So my question is this here. This seems very strategic. Would you agree, Cliff? Am I off my rocker? Talk to me.
I mean, it could be. I would say this. I would agree with you only because it was so severe. Okay. It's a black swan event. It dropped, 50%. I mean, that's a rare occasion. Now, I would buy some. I'd buy.
Sure.
I think buying right now is probably a good idea. But you're right. Because you have to realize too, there's no regulation on Bitcoin. You can manipulate it if you're playing big, if you got lots of money in it, you're playing billions of dollars. You can manipulate Bitcoin.
Easy. And you're correct. You're correct. The Genius Act, RVA, Mikey, didn't really relate to the Bitcoin, just stable coins. You're correct, but I disagree in a little bit. Because the Genius Act was a play to bring the blockchain to the mainstream when it comes to the government. If they can actually set up something to where it shakes hands with the government, now what happens is the government can force out any third-party players on the blockchain. Would that be correct or incorrect?
Right. Yeah. I mean, what it's going to do is it's building the foundation for banks or other third-party services to be able to use stablecoins as currency to hold accounts, because anybody who's going to take a stablecoin more than likely is also going to take Bitcoin.
Correct.
Right. And some already do. Big firms like Fidelity already accept Bitcoin. Robinhood accepts Bitcoin. So there's very few financial services that don't accept it.
Correct. Now, let's go back to Mark real fast. He goes a little deeper real fast, guys, and can answer some questions. Here we go.
That's the thread that we need to pull on, we need to dig into. Now, before I keep going, I do want to say that I got A lot of this information from Jeff Park, who wrote an article on this, and also from Samson Mao, who wrote a big Twitter thread on this. I'm going to link to both of their inspirational posts down below so you can read those. A lot more information on this if you want to go down into those rabbit holes and pull those weeds. But let's go and dig into this thread here, the thread that we need to pull. Now, like I said, whenever something like this happens, everybody's looking for the culprit, right? They want a villain. Like, whose fault was it? And again, that's important, right? We want to learn how to read the markets. We want to learn how to protect ourselves. And more importantly, we want to learn how to take advantage of these moves. And so some of the biggest moves that we see, some of the biggest theories going around are, like I said earlier, like a fund in Hong Kong collapsed, right? They got caught in like a yen carry trade, and then it just cascaded down into Bitcoin. And that's a good story. It's a clean story. I get the appeal, but it's got a lot of holes. Like, so first of all, the kind of prime brokerage that would service that level of complex trading, that would have probably tightened up the risk controls long before it got to this point. Now, with that size, with that sophistication, like, these aren't amateurs that were doing this. Second, if the theory is they used IBIT options to trade out of the hole, then a Bitcoin decline doesn't accelerate anything, right? The options would just die. They would expire worthless. The only way you get this insane downside acceleration is if they were short puts. And no one's really shorting Bitcoin puts to fund a yen carry trade not at this size at all. So the single entity theory doesn't really work out for us, which brings us to a much more interesting and I think a much more important possibility. What if there was no single culprit at all? Now, here's something that most people get wrong about markets, right? They think prices move because of news. Some headline drops, people react, right? The market moves. But that's not how it actually works. Price moves because of positioning, right? Where the money is sitting, how it's hedged, and what happens when it's forced to move. Now, once Bitcoin entered the ETF world, it stopped trading like this isolated crypto asset. It started trading like a risk component inside institutional portfolios. Now, today, it's sitting right next to software stocks. It's sitting next to other risk assets in the same books, governed by the same risk managers, subject to the same margin rules. So if you understand that one single idea, everything that follows from here on out, it's going to make sense. Now, once you see how these three mechanics connect, you're going to understand why this crash actually sets up the next move, not delayed it. All right, so here's what I think actually went down. And it comes down to three things that stacked on top of each other, like dominoes. I'm going to break all three down separately so it's easy to understand. Again, so first we have the trigger. Right. And here's a simple version. Like, Bitcoin didn't crash because of Bitcoin. It crashed because it was sitting in the same portfolio as everything else that was crashing at the same time. Risk managers told everyone to just sell everything. Let me show you why I believe that. Just take a look at these two charts right here. Bitcoin's correlation with software equities over the past few weeks has been almost in lockstep. Now, also look at this chart, the Bitcoin versus gold chart. You can see it's much weaker. Now, why does that matter? Because gold doesn't sit inside multi-strategy hedge fund portfolios. It's not part of their funding trades, but software stocks are. And now, through the ETFs, Bitcoin's in the same books right next to them. It's sort of like, imagine you've got like a filing cabinet and you've got all your important documents. They're all organized perfectly right inside that file cabinet. But then somebody walks by and they pull the whole cabinet off the wall. Well, everything falls out. Not because of any of the individual documents that were in there, right? That wasn't the problem. But because they were all in the same file cabinet that got ripped off the wall, right? That's what happened, right? Goldman tells us this was catastrophic. Risk managers at places like Millennium and Citadel, they stepped in and said, basically, cut everything, right? It doesn't matter what it is. If it's in the book, just sell it. And Bitcoin was in the book. Right? So that's the trigger. And it explains why the selling started, but it doesn't explain why it got so violent, why it continued to go down 13% in a single day, right? This isn't something normal. Something amplified this, okay? So the second thing that we want to look at is the accelerant. Now, here's a simple version of that. There's popular trades on Wall Street where big funds buy the Bitcoin ETF, and then they short the future to capture the spread. Now, when those trades get forcibly unwound, it creates this massive selling pressure, and there's nobody on the other side of that. Now, on top of that, banks have been selling financial products tied to Bitcoin's price with built-in tripwire. When the price crosses certain levels, the math forces dealers to sell even more into the falling market. And then, of course, selling causes more selling, and it creates this feedback loop. Now, let me show you exactly what that looked like. You can see the CME basis trade is the classic example, right? You can buy spot Bitcoin through the ETF, you can short CMA futures, and you can pocket the spread, right? You're not betting on direction, you're just trying to capture the gap there. But when the risk manager says degross everything, even those hedged positions, they have to unwind. I mean, look at this. The near dated basis jumped from 3.3% to 9% in a single day.
Wow.
That's one of the biggest moves we've seen since the ETF launched. But that's the basis trade being forcibly unwound. When funds like Millennium and Citadel, right, they're massive players in the Bitcoin ETF complex, when they get the call from risk management, this is what it looks like, right? Now, here's where it cascades. Now, on top of all this, you've got structured products, things like knock-in put notes that banks like JP Morgan have been pricing. It's sort of like, maybe call it a tripwire, right? As long as the price stays above a certain level, everything's fine. But when it crosses that barrier, then the dealer's hedging math, it completely changes. They suddenly have to sell. They have to sell aggressively into the falling market, right? And they do that just to stay hedged. All that selling, it pushes the price down further, which triggers, of course, more selling.
Yeah.
Now, to make it even worse, crypto dealers had also been selling options way too cheaply for weeks because the volatility had been so low. So basically, everybody was sitting on the wrong side of this at the same time. So when the move hit, the whole system was pushing in one direction. It's sort of like, imagine like a revolving door that everyone tries to exit at the same time, right? The door doesn't speed up, it just jams, and then it spins out of control. Now, if we want to understand this, we can just look at the evidence, right? Here's the part that really ties this whole thing together. And this is the data point that nobody seems to be talking about. The simple version is the selling was so violent that the market makers ended up selling shares they didn't actually have.
Whoa.
That created new units in the system, and then real buyers had to come in the next day and buy the dip. Right? That's why the ETF showed net inflows on a 13% down day. It wasn't people buying through the crash. It was the plumbing breaking and then getting repaired. Let me show you what I'm talking about. After all that, the record volume, the 13% crash, the basis trade unwind, the gamma squeeze, the ETF saw net inflows. New shares were created. But how is that possible? Because the selling was so fast, the market makers had to short IBIT beyond their own inventory that they had.
Damn.
So when you're a dealer trying to hedge a move this violent, you end up selling shares that you don't technically have. Now that mechanically creates new units. It's not bullish buying during the crash, it's the byproduct of the chaos itself. Then we saw on February 6th, Bitcoin bounced 10%. Now, if you look at this chart here, you can see the CME open interest collapsed on the 5th, right? That's the basis trade unwinding. But then you can see it came right back on the 6th when traders re-entered at better levels.
Damn.
Meanwhile, Binance open interest collapsed and stayed down. Now that tells you the whole story. The traditional finance side broke Bitcoin. The traditional finance side put it back together. And the crypto native side, it took the real damage. Okay, so now if we take that and we
So Cliff, man, that's a lot of information. What do you think about what he's saying?
It makes sense. I mean, because a lot of the hedge funds, their risk management is the same way.
Yeah.
So usually you see those big moves is because, you know, let's be honest, the BlackRocks, the Citadels, they own 30% of the market.
They do.
If their risk management sees that there's a reason to hedge and start shorting,
Yeah.
I'm a smaller firm, I'm probably going to do what BlackRock did.
Exactly.
Start shorting it too.
Mhm.
And when you start piling on about all these risk managers doing the same thing,
Yeah.
it starts to tilt everything in the same direction.
Wow. You're right. I agree. I think Mark Moss is one of the best I've ever seen. I think at the end he was saying that how crypto has the blockchain has been constructed, its construction may have caused this, but I think a lot of investors were overzealous when he said they were selling units that they didn't have. I'm like, yeah, that ain't good at all. Sound like something. There's a lot of greedy people there, which is fine. But hey, now's the time, guys, to be honest with you, to go out and buy crypto. It's low now. Because I agree, it will go back up. It will. So I would say I may buy some now and see what actually happens. For the first time, Cliff, I may buy some crypto, some Bitcoin, crypto. Now, what coins would you say would be the best ones to buy? Bitcoin and what else?
It depends what you're trying to do. Solara is good, Bitcoin. But like I said, it depends what your strategy is. Are you buying it for long term? You're doing it short term? You're just trying to get dividends? Like, it depends what you're trying to do. You want long term Bitcoin, and you probably don't put too much into it. You might put 1 to 4% of your portfolio, something like that, because that's a long term play, right? It's got high volatility. Well, you're seeing the volatility of it low. Wait till you see the volatility of it high. When it doubles in 6 months, then you're gonna be happy when you see the other side of it.
Yeah.
Right.
Yeah.
So it just depends on what you're trying to do, because you might want to stake it. You might stake out like a Solara. Even ETH. Ethereum is doing okay. You can even take a look at that. That has a little bit more of a backbone to it than Bitcoin, because you can build on Ethereum. It's more programmable. So those are the main ones.
Yeah. Sounds good, man. Hey guys, follow his counsel, brother. Follow his counsel. I think this is a good time to buy some crypto when it's slow, which is pretty good. A lot of investors that I know that are very astute investors in crypto, they're buying now. They're buying now because they anticipate the boomerang to go back up. And I agree. I agree 1,000%. Guys, let's go to the second one, guys, real quickly here, man. Yo, a foreclosure bloodbath. 40,000 homes seized. The question is this 2008 again? Guys, let's bring in our guys from Valuetainment real quickly, guys, and dive into this, man. Let's see what's going on. Here we go.
Foreclosures bloodbath deepens as banks seize 40,000 homes in just 1 month, and the pain is only beginning. 40,000 in 1 month. Let's see what Tom's got to say about this. With the number of Americans losing their homes to banks rising for an 11th straight month, it's clear the housing crisis is getting worse rather than better. The U.S. foreclosure activity jumped again in January 2026 with a total of 40,534 properties facing foreclosure filings, a 32% increase from the same time last year. Foreclosure filing cover every stage of the process, from the moment a lender issued a legal warning to the point a home is formally seized after missed mortgage payments. While the total was slightly lower than December, January still marked the 11th straight month a rising year-over-year foreclosure activity, a clear sign the pressure is building, not easing. He said foreclosure rising across the board, said Rob Barber, CEO of Adam. He said foreclosure starts when lenders formally begin the process of taking back a home are up 26%, while completed repos have surged nearly 59%. Tom.
So I've been talking about this year that this K-shaped economy we're in and what's happening with the consumer. When I talk about 1.26, we're almost at 1.3 trillion of credit card debt. That is stress on the consumer. That means he can't pay for other things. And when core things have not come back down, remember, inflation rate is now moderated. It's not rising anymore, but the prices from yesteryear are still very high in baskets of goods for the consumer. And so now the consumer is coming to the point, especially those, remember, this is repossessions of homes. This isn't renters. These are homeowners that can no longer pay the mortgage. And you look year over year, the foreclosures are up. Foreclosure is like the final late notice. Vinny, you're 30 days late. You're 60 days late. You're 90 days late. Vinny, we're officially in foreclosure. We're foreclosing. In other words, we're going to shut down your mortgage. Then what happens to repossession? The repossession is up almost 60%. This is a sign of deep stress in the lowest, in the lower, and if you dive into these numbers, Pat, it's actually happening to the lower half of the middle class.
Right.
And the lower half of the middle class are the wage earners that have less savings and less margin for error, less ability to get through a stress, and that's what's happening right now. You've got the lower half, Pat, is under deep stress, and remember, these are trailing stats. It takes, in some states, almost 6 months to complete a repo.
Right.
So that means, Pat, these consumers have been under the stress for 6 months from miss 1, miss 2, miss 3, foreclosure, and then repo. The stress is building.
Any fixing it, Tommy? Like what can
You need patterns I want to see is what areas this is impacting. Is it, because whenever you get numbers like this, you want to make sure, you see where it is. Okay, so I just looked it up right now. Top 10 areas most affected by foreclosures, okay? Worst state is Delaware, 1,612 units.
Oh.
Jeez.
Second, by the way, who the hell would have thought Delaware? What's Delaware's population? If it's 1,612 units and it's Delaware's population is what? Where is Delaware in population, period? 1 million
This
people.
is like from
So what is the state with the least amount of population? What is the state with the least amount of people
I thought
living
it was
there?
North Dakota.
somewhere in the
Alaska.
freezing
Can you ask it?
northern
State with
Midwest.
least amount of
Wherever
population.
it is, it's cold.
Montana,
But the
I know,
point is,
Wyoming.
Been there, lived there.
go back to see who else is after Wyoming, Rob. Go a little bit lower, show more. Who's after Wyoming?
Vermont and Alaska.
Vermont.
Okay. Well, Delaware has
Basically,
to be
when
top
it's
5.
cold and north, and nobody wants to be there.
But to be number 1
Yeah.
and you're one of the smallest states, that means this is Delaware.
Okay.
Then you got Nevada. So Delaware was 1 per 1,612 units. Nevada is 1 per 1,983 units. Florida's 1 per 2,000. Then it goes to South Carolina. Then it goes Maryland. And then, these are the ones that are most affected. Metro area, like if we go specific metro, not state, Trenton, Jersey is number 1.
Wow.
Punta Gorda is Florida. Florida is number 2.
That's Jacksonville.
Fayette, how do you pronounce it?
Fayetteville.
Fayetteville, North Carolina is number 3. Then you got Lakeland, Florida, Vallejo, California. Areas least affected, okay? Dakota, Montana, North Dakota, Wisconsin, Kansas, Vermont's all the way at the top, very low foreclosures. West Virginia, Alaska, Rhode Island, Nebraska. So what this means is places that are being affected are, we're learning some of the states that are being affected by this. When California went through the whole NAGAM thing, remember what city and area everybody was talking about in California?
San Bernardino, where they built the excess homes and all the Nina loans.
Right, Riverside, 64% of homes were in foreclosure. Vinny, you would drive in Riverside and all you would see is boards and houses. It was insane what happened. Looked like a desert. But we'll see what happened with this.
I would say, Cliff, I'm not surprised. I've been saying on several podcasts that we've done, the buyers have manufactured, a lot of borrowers have manufactured pay raises with the $1.3 trillion owed in credit card debt. Therefore, their debt-to-EI ratio has risen. So if they want to go out and buy a new property, then most likely we're not qualified from a DTI standpoint. And number 2, typically the sellers are normally the people that actually put property on the market to either go to a bigger property or a smaller property to unload a property that needs to be sold because of it's dilapidated, it needs renovation. I think that we're in a stagnated situation because the rates are too high right now. No one's going to go from a 2 or 3% interest rate to a 6-7% interest rate. I wouldn't. I know you would not at all, period. And it's just right now, the buyers can't afford to make that mortgage payment. You agree or disagree?
Yeah, the market's stagnant. Basically what happened is the inflation just destroyed everything. It destroyed interest rates, destroyed prices.
It did.
I mean, it's the worst combination you could have when not only are prices going up, so that $100,000 house is now $200,000.
Correct.
But additionally, on top of that, the interest rate is high. It went from 3% to 6%. So now it's really far out of reach.
Correct. Correct.
How do you unwind that? I think it's going to take years.
1 year or 2 years.
It's going to be a spark. It's going to take time because you got to think we have to overcome a 20% inflation rate over 3.5, 4 years. Because it was up. Remember, we were doing on a podcast. We're saying we were seeing numbers 10% inflation this month.
Jesus. Jeez.
So roll that over a month, see it for the year, and then see that for a month. You know what I mean? So the idea of how long will it take for the average person for their wages to grow 20%?
That's
7 years?
Jesus.
Probably 7 years is what I'm thinking. So we're 2 in?
5 more to go. I want to go. Buyer of sellers, you better get creative. You better get creative when it comes to selling your properties, because if you're wanting someone to come out and go out and borrow money at a 7.25%, 6.25% clip interest rate to buy your property, you have to give us some serious concessions. You better get more creative with selling your property. Lease purchases, seller financing, subject to. You better get more creative or your property is not going to sell at all. We sit on the property for 5 years, and what'll happen is you'll fall in these exact same numbers of 40,000 homes being in foreclosure, because there's no way you can afford 2 mortgage payments or mortgage payment and a rental payment. There's no way. So you better get more creative. You better. And you realtors, start giving out this bad information. Start giving them wisdom. Get educated on different options that you can consult your clients on in buying and or selling properties. Stop being a one trick pony. This is getting ridiculous. You can do this, but yeah, get your head out your ass. You don't have to do that, guys. You really are. You can still make your commission, right, with a creative financing scenario. Am I right, Cliff? Am I wrong?
No, you're right.
Come on, guys. It's ridiculous. Bad realtors, man. Come on, man. Let's get better. Let's do better. So if you want to say anything, man, before move on, big dog.
No, man. It's a unfortunate situation. I mean, the market is just. I'm seeing them sit. Seeing days on market last longer. You know, there's pockets where it's doing fine, but we're used to seeing the market be nice and year over year the values are going up.
Yeah.
It's just slow. It's slow. Most people are sitting because you got to realize half the population probably doesn't have a mortgage. There's a lot of people who don't have a mortgage. And the people who do, half of them who actually do have a mortgage, it's at sub 4%.
Correct.
So they're not leaving.
Correct.
So usually you get some transactions because people are leaving, people are buying new. We're not getting into that.
No, we're not. We're not, guys. Hey, guys, again, and stop depending upon the new Fed chairman to come in and cut rates. They say he does. I don't think there'll be a really big uptick in volume. It's not, because he's going to maybe cut a quarter of a point. If he does half a point, it makes it a little bit of a jump in applications. Keyword is applications, not money being exchanged for buying properties. No. Again, guys, we have to be honest about this. Gotta be honest about it. Man, it's something. Lastly, guys, this one is near and dear to me and Cliff. The reason why, guys, is because of the fact that squatters is a real thing, Cliff. Am I right? Am I wrong? Now, the one thing that I see, and this normally happens in different cities, squatters are very good at reading clouded title. Now, guys, whenever you buy a property, real estate, you go close at a title company. A title company is a third party that's there to ensure that this transaction is closed properly. When you get there, you normally buy a title policy. Why? You want to make sure that there's not any existing liens outside of the current lien there. If there's a lien there, right, that needs to be cleared up, and you'll buy a policy. So if a lien is missed, you can file a claim on that title policy, which is just insurance, that is, to pay off that lien. That's why you buy a title policy. Am I right, Cliff? Am I wrong?
Yeah, exactly. Yeah.
Now, squatters are very good at reading clouded title. Clouded title means a bad chain of title. You have an origination point when it comes to title, and it goes all the way up to its current state. Squatters are good at this. Let me show you how good they are, guys. All right, real quickly. And then what'll happen is I'll give you a real live example. This actually happened. A real example. Here we go. Let's get it in.
All of the responsibilities are on me, and I can't get into my property. There's a leak in the property. The water bill is escalating. I can't get in there to see what's going on.
A DC homeowner claiming an Airbnb guest has overstayed their welcome and will not leave. In this story you'll only see on 7 News, we're digging into DC law Finding out there's not much that homeowner can do. Our Washington, D.C. reporter Felicia Ashley spoke with the homeowner and tried to speak with the alleged squatter.
The alleged squatter originally got into the home through Airbnb, claiming that her apartment caught fire and it needed time to get repairs. Now that was back in February. Roshane Douglas says she didn't know she was opening her life up to a nightmare when she accepted Shadija Romero's Airbnb reservation almost 10 months ago. That reservation ended March 29th after 32 days, and Romero hasn't paid another dime. But living in the home for over a month apparently lets her claim some form of tenant rights, and she refuses to let Roshane enter the property.
I never gave her any tenancy. I never gave her a lease.
Roshane tried everything, gave her a 30-day notice to vacate, called police, went to court, and even offered Romero $2,500 to sign a paper admitting she's not a tenant and to get out. Wow. Romero signed the document, but didn't budge.
November the 15th came and she told me, this no longer works for me. Do what you have to do. I'm not leaving. I went to the police with my order, and they said there's nothing that they can do, that I need to go to court, which I've done, and I do not have a court date until December the 11th.
Roshane put this sign up on her home so police and neighbors would know Romero was not authorized to be there. A sign Romero covered with a sheet.
I need police assistance.
I was there when police helped Roshane cut it down, while Romero hid inside.
It's shocking to me that you would abuse a system like that.
While all this is going on, Romero's social media shows her living her best life on trips and promoting her nonprofit.
Damn.
And Roshane is left paying thousands in attorney fees, the mortgage, and utilities for a home she can't even enter.
Damn.
I tried to get some answers from Romero, who was clearly inside the home, but she never came to the door. When a person walked out to her car, they didn't want to talk to us either. Roshane is waiting now for her court date next week, where she's hoping the judge's decision will allow U.S. Marshals to force her unwanted guest out once and for all. For now, we're bringing from Northeast.
So Cliff, man, real fast, brother, describes to somebody, man, what is a squatter?
Man, what you just heard. Man. Now that could only happen in like DC, New York, California, especially California. Ooh. Because what ends up happening is now a lot of them have laws that say if you're in a house longer than 30 days, you're now a tenant and you get tenant rights.
Yes.
And so now that's what the squatter's doing. They just stay until they hit the 30 days. Now I'm legally a tenant and you have to evict me. Yes. Then you get to tie it up in court. You heard get a court date. And that could be months away. And in the meantime, they're going to stay in the house.
Yep. Yeah.
And even if you do go to court, they could file a stay. They could do a bunch of stuff to make it push even further. Man, I'm surprised she said the water was on. I'm surprised she didn't turn off the water.
Yeah. Water, electric, something.
Right.
Some. And then the lady living her best life, but turned up.
I mean, I can't believe she on social media living.
I'll be turned up. Now, here's a technique that a lot of these squatters use. This is the reason why we said why every investor needs a title policy. Squatters are good at reading, going to the courthouse, or getting some type of legal counsel on how to locate clouded title. If they can look at clouded title, they can move into a property. It can be vacant or not vacant, typically vacant, right? Move into that property, stay there for that 30-day time frame, manufacture a lease. All of a sudden now, they have a tenancy there. And if you're in New York or DC, as you just heard, they're looking at probably minimum 36 months. 36 months because they know the system. They know it. This is the reason why a title policy is so important, because it makes sure that you don't fall victim to some type of squatters that are good at this, because you have a clear, clean title. If it's clean, make sure that property is upkept well, right? As you try to lease that property out. Because if you don't, someone can move it into that boy, and all of a sudden now you're in a legal fight now. This is real, y'all. This is real. So again, if you're an investor, whether you are buying a property with financing or not, get a title policy.
Yep.
Because it's going to save your ass. Go ahead, Cliff.
Nah, just make sure you get title policy. You go to closing, get a title policy every time.
Every single time, man. Because if something comes up, guys, guess who has to pay for that lien? Not you. The title company does. Every time. That happened to me one time to where, they had to pay. They had to pay. They did. Sure did. But anyways, guys, well, Cliff, man, before we leave, man, guys, real fast, it is cool to have a licensed appraiser on the screen. You can name Cliff Hunter. Cliff is a licensed appraiser in the state of Texas, but he can go all over the nation commercial-wise. Cliff, man, is it normal to have access to an appraiser?
No.
Matter of fact, it is frowned upon. But guys, Cliff is making himself available for you guys to talk with them, ask them questions. Cliff, tell them about Hunter Appraiser.
Well, yeah. So just go to the website if you're looking for like consulting or any kind of appraisal work. Just any kind of situation you're dealing with involving real estate, we probably can help you out. Just go to the website, fill out the form, give us a call, and we'll be able to hook you up.
Yes, sir, guys. Again, go reach out to them, guys. And lastly, man, we are about to relaunch the Cash Flow Club, guys. And we got something cooking. That begins next week. As far as the development of it, that's going to change the game. And we ain't gonna say nothing. We're going to give first dibs access to the Cash Flow Club real estate community. And when we tell you guys what it is, it's going to blow your mind. It's going to, Cliff, am I right or am I wrong?
Oh yeah, man. It's something that doesn't exist right now
at all. And the goal is to make a novice investor a seasoned investor with your phone. I'm trying to tell y'all guys, it's coming, man. But my man, Cliff, man, that's all I have for today, man. Cliff, we want to say anything for me before we get done? Oh, one last thing, guys. My bad. Hey, guys, if you guys want the free book, guys, to Stress Property Investing, DM me the word real estate. Scan on the QR code or click on the link below, guys. How you make your money when you buy, not when you sell. Selling is the icing of the cake, guys. We like to buy properties below wholesale. This book tells you how to do that, and it is free. It's free. Click on the link below, see on the QR code, or DM us the word real estate. Get out to you today, guys. Guys, that's all I have to say. I had today, man. Cliff, want to say anything, man, before we get done?
No, man. Just good episode, man. Enjoy the weekend, enjoy the family, man. And man, I haven't said it in a minute, but you one deal away.
Just one. Cliff, real fast before you get off. Your first deal that you ever did in real estate, how much did you make?
Oh man, that first deal, I think it was like 25.
2,500?
25,000.
25,000. Is that a flip?
Yeah.
25.
Well, it was a rental that I had for like a year, and then I sold it, made like 25. So I got rental money along the way too. So if I include the rent, because I was netting about $400 or $500 a month. And let me tell you, and let me go into. He asked the question, so I'll let y'all know. And Dale would know. I bought that property for like 50. I only put in 20, I think 30,000. And this is in Fort Worth. If I would have held it, that property today is easily worth about 330. Easy. But I sold it and I made my 25, 30K, something like that.
You good. First deal I ever did was a wholesale deal. I made $3,500. It was in Irving. Second deal I ever did, I made 10,000. That was a kind of a flip there. I actually made 10 grand when I bought it. That paid for my wedding, my entire wedding. And then lastly, I bought a property in Arlington, 3 minutes away from AT&T Stadium, which is Jerry's World. Bought $50,000. I was putting about 30 grand to it. It was going to be worth about 150, 165. I sold it for 85,000. Someone came and said, you know what, I want this property. I sold it for 85,000, so I made about 26 grand. Not bad, guys. Again, we say these numbers not to brag. You are one deal away. change your life. But guys, thank you for your time, guys. Happy Valentine's Day to all the ladies and the fellas too. I love on you, boo, guys. All right, y'all. See y'all next time. All right, y'all. Peace.
My whole thing is, one thing I hear a lot of the times when it comes to anybody in real estate is, I don't have the money or the credit or the time or the intellectual property. And I said, okay, no problem. I have the money, have the credit, have the relationships. I'll teach you how to locate a good deal, right? Buy below wholesale.
I love that.
And once I teach you that, right, I'll bring me the deal. I help you underwrite the deal, which is fine. I'll even fund the transaction for you as well. So there's no excuses on the table at all. That's why we call that the cash flow club, period. So what happens is people always ask me all the time, Dale, can you train me? Well, I don't have the time to do that. But what if I set up a platform for it to where you get on-demand training? Anytime you want to, because the training you may need may be after you get off work, early in the morning, during the day. You just log into your account and get the same training as if I'm sitting there one-on-one. We're talking about our attorneys, our general contractors, our appraisers, as well as me, talking about how to structure your business, how to put together what they call a power team. A power team is very important. How to put a deal together, right, and buy it at the right price point. How to market. There's one technique that people don't understand, that you can actually get a list of properties that from your city for free.
Whoa. So walk me through that. Like, you can physically get buildings or homes or properties available for free?
Yeah, I'll send you guys the bill in the mail. It's real simple. What you can do is you can actually call down to your city and ask for the violations division. What happens is you say, hey, I want to see what homes in our city actually have violations. What are violations? High grass, no paint, vacant. You have boards on there. Those are actually violations that the city, or citation that the city has actually levied against that property. They'll give you that list for free. It may be a little bit of a fee, maybe $100.
Sure.
But it is what it is. Then what you do is you actually you can contact those sellers of those properties one-on-one.
Wow, and that's how you make your money. That's one way. That's one way.
If you'd like to learn how successful real estate investors make money when they acquire real estate, but not when they sell it, click on the link below, swipe up, DM me the word real estate to download our free ebook, Distressed Property Investing. The blueprint is in the ebook. Stay blessed. I'll let your partner and download the ebook today.
Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Big God, big grace. Big God.